Welcome back to your daily market briefing. I'm your host, and joining me, as always, is our esteemed AI analyst, who today has processed over 475 articles and meticulously analyzed data for over 5,000 stocks, spanning 12 sectors. Good to have you with us. What's the sentiment you're picking up today?
Thank you. Today's market session was undeniably challenging, reflecting a broad-based retreat across the indices. The tone is cautious, primarily driven by escalating geopolitical concerns and some mixed corporate earnings reports. We're seeing investors digest a lot of moving parts.
That certainly sounds like a day where every investor needed to keep a close eye on their screens. Let's get right into it. How did the market perform by the numbers today?
Indeed, all major indices closed in negative territory. The S&P 500 fell by 1.49%, closing at 6,508.32. The Nasdaq, heavily weighted towards technology, saw a sharper decline of 1.99%, ending the day at 21,650.21. The Dow Jones Industrial Average dropped by a more modest 0.9%, landing at 45,605.58, and small-cap stocks, as measured by the Russell 2000, took the biggest hit, down 2.27% to close at 2,438.03.
Ouch, a rough day across the board. What about volatility and treasury yields, which often tell us a lot about market sentiment?
Volatility, as measured by the VIX or VIX index, rose to 26.76, indicating increased investor anxiety. On the bond front, the benchmark 10-year Treasury yield climbed to 4.39%, while the 2-year Treasury yield also moved up to 3.62%. The yield curve remains in a normal state with a spread of 0.77%, though the upward movement in yield signals ongoing concerns about inflation and potentially tighter monetary conditions ahead. Our advanced decline ratio is quite telling today as well, with only 125 stocks advancing against 376 declining issues. This shows a very clear defensive posture in the market.
A very clear defensive posture indeed. So with that broad market weakness, what were the big stories that really moved the needle today? It sounds like there's a lot weighing on investors' minds.
Absolutely. The dominant narrative today, heavily influencing market-wide sentiment, was the escalating geopolitical situation in the Middle East and its direct impact on energy prices and supply chains. According to J.P. Morgan Chase strategists, as reported by Investing.com, they've trimmed their year-end target for the S&P 500, explicitly citing the widening conflict as a key risk factor.
That's a significant revision from a major bank. What exactly is driving these concerns? Is it primarily oil?
Primarily, yes. Yahoo Finance video highlighted that the U.S. is intensifying efforts to reopen the Strait of Hormuz, a crucial choke point that handles roughly 20% of global oil supply. Saudi oil giant Aramco's CEO, Amin Nasser, issued a stark warning stating that the Iran war threatens catastrophic consequences for the global oil market, describing it as by far the biggest crisis faced by the region's oil and gas industry. This has driven Brent crude to over $108 a barrel, and even as high as $119 earlier in the week. Higher energy costs directly translate to inflationary pressures and tighter financial conditions.
So it's not just about the immediate price of oil, but the wider economic fallout as well. This certainly explains some of the defensive selling we saw. What about specific companies being impacted by these global pressures?
We're seeing the ripple effects in corporate guidance, particularly for consumer-facing businesses. Take Macy's, ticker M, for example. While they beat Wall Street's quarterly sales and profit expectations, according to CNBC, they still issued a cautious outlook for the year ahead. Their CEO, Tony Spring, specifically mentioned macroeconomic and geopolitical factors that could influence discretionary spend and the potential hit from tariffs in their full-year guidance. Similarly, Lululemon, ticker LULU, offered a weak 2026 outlook, citing tariffs and higher expenses, as reported by CNBC. The company expects tariffs alone to cost $380 million this year on a gross basis.
Tariffs really hitting those retailers. It seems like the market is grappling with both supply-side cost pressures and potential demand weakness. Shifting gears slightly, the AI boom has been a huge story. Is that still a tailwind, or are there new developments there?
The AI boom remains a powerful tailwind, but it's evolving, creating new opportunities and challenges. CNBC reported today on how the demand for new AI data centers is igniting a lucrative career path for skilled trades workers, what they're calling new-collar jobs. Companies like Alphabet, Microsoft, Meta, and Amazon are committing nearly $700 billion in combined capital expenditure this year to fund these developments. This surge is creating high-paying roles for robotic technicians, HVAC engineers, and electricians, with some salaries reaching six figures.
That's fascinating. A direct and tangible economic benefit from the AI infrastructure build-out. How is this translating to the semiconductor and technology companies we follow so closely?
It's a mixed bag, but mostly positive for those directly involved. Micron, ticker MU for instance, has seen its stock soar, up 62% so far this year, riding the memory price spike driven by heavy demand for NVIDIA's AI chips. According to CNBC, Micron CEO Sanjay Mehrotra stated that memory is a key enabler of AI, and the company is sold out of high-bandwidth memory for 2026. Broadcom, ticker AVGO, also reported better-than-expected earnings and issued strong guidance, with AI revenue doubling, driven by robust demand for custom AI accelerators and networking solutions, as reported by CNBC.
So, a strong demand for AI, but I also saw some news about Supermicro today. What's happening there?
Yes, a notable exception to the general AI optimism, or at least a significant headwind, is Supermicro, ticker SMCI. Yahoo Finance reported that Supermicro stock plunged 33% today after an unsealed indictment revealed that U.S. prosecutors charged two Supermicro employees and a contractor with conspiring to smuggle servers containing NVIDIA, ticker NVDA, chips to China, violating U.S. export controls. This created broader anxiety across the AI semiconductor industry today, contributing to declines in other major chip stocks. This kind of regulatory risk is definitely something investors are watching closely in the AI supply chain.
That's a significant development, certainly adding a layer of caution to the AI sector. Moving away from AI, were there any other interesting corporate stories or sector-specific news today?
Yes, there were a couple of other notable items. In healthcare, Johnson & Johnson, ticker J&J, announced that the U.S. Food and Drug Administration approved its once-daily psoriasis pill, Icotide. This is significant as it's the first oral option to rival best-selling injectable treatments like J&J's own Tremfya and AbbVie's, ticker ABBV's, Skyrizi, according to CNBC. This offers a new, potentially revolutionary option for millions of patients who fear needles.
That's a big win for J&J and for patients. Anything happening in the entertainment world?
Absolutely. Disney, ticker DIS, is embarking on a new chapter as Josh D'Amaro officially takes over as CEO, succeeding Bob Iger. CNBC reported that D'Amaro, who previously led Disney Experiences, is focused on sustaining momentum in theme parks and streaming and embracing technology to advance all parts of the company. He also highlighted the upcoming combination of Disney Plus and Hulu. While Disney's stock is down over 10% year-to-date, this leadership transition marks a new strategic direction.
So, a new leader at Disney. Big news for the entertainment giant. Now, let's turn our attention to the Magnificent Seven, those mega-cap tech stocks that have driven so much of the market's performance. How did they fare in today's tough environment?
The Magnificent Seven generally followed the broader market's downward trend today. Apple, ticker AAPL, managed a slight gain of 0.03%. Microsoft, ticker MSFT, however, was down 1.14%, continuing its multi-month decline. Alphabet, ticker GOOGL, the parent company of Google, also saw a decrease of 1.64%. Amazon, ticker AMZN, closed down 1.03%. NVIDIA, ticker NVDA, which we just discussed, took a significant hit, falling 2.81%, largely due to the Supermicro news. Meta Platforms, ticker META, was down 1.63%, and Tesla, ticker TSLA, saw a notable drop of 3.01%, extending its year-to-date struggles. Overall, a challenging day for most of these dominant tech players, with some significant pullbacks from their recent highs.
A decidedly red day for the tech titans. Beyond the big names, what else stood out in terms of individual movers and sector performance across the market?
In terms of individual movers, the utility sector saw some of the biggest declines today. Vistra, ticker VST, was a top loser, down 12.16%, and Constellation Energy, ticker CEG, fell 10.3%. NRG Energy, ticker NRG, also dropped 9.75%. This is likely tied to the rising treasury yields making their dividends less attractive. In basic materials, Mosaic, ticker MOS, fell 8.63% after a downgrade from Bank of America, citing margin pressures from rising raw material costs and geopolitical tensions. Supermicro, ticker SMCI, as we mentioned, plummeted 8.5%. On the gaining side, some technology and communication services names showed resilience. Gartner, ticker IT, rose 3.16%, and the Trade Desk, ticker TTD, was up 3.04%. Workday, ticker WDAY, saw a gain of 2.95%, and Humana, ticker HUMA, in healthcare, was up 2.93%. AppLevin, ticker APPL, also climbed 2.29%. Regarding sector performance, energy continues to lead in terms of momentum, with 76.64% of its stocks trading above their 50-day moving average. Utilities, despite today's drop, still have 64.08% above their 200-day moving average, showing longer-term strength. However, technology, communication services, and consumer cyclical sectors had fewer stocks above their short-term moving averages, indicating weaker near-term momentum.
That gives us a great snapshot of the market's dynamics today. As we look ahead to tomorrow, what are one or two key things investors should keep an eye on?
Looking ahead, the immediate focus will remain on geopolitical developments in the Middle East and their impact on oil prices. Any further escalation or de-escalation could significantly influence market sentiment. Additionally, we have earnings reports from GameStop, ticker GME, Carnival, ticker CCL, and KB Home, ticker KBH, next week. These will provide further insights into consumer spending and the housing market, which are crucial for understanding the broader economic picture.
Excellent insights, as always. Thank you for breaking down another complex day in the markets for us.
My pleasure.
That's our market analysis for today. Thank you for listening. This is Lynx DI, and we will be back tomorrow with your next market briefing.